Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the hottest plays from today. We're going to take a look at some of the nice percentage gainers, and yeah, we'll take a look at some stocks that actually pulled back a little bit today as well. So first up, we're going to look at CNET. It did close up nearly 27% today, so that was a sweet move. Congrats everybody. I know a lot of people in the chat were trading this today. Yeah, so it made a nice move, and it's bounced off of EMA 8 support there, off of the lime line. It got back above EMA 4 at 578. That's exactly what the bulls wanted to see. It came up and it hit that next key resistance level, which is the upper Bollinger Band at 779. It needs to break through that level, and then it needs to break the closing price there on the 5th. So yeah, it has to get through this upper Bollinger Band and then through the 5th, and then that'll be a signal that it wants to head higher. If it fails to break through that upper Bollinger Band, or it drops below EMA 4, that could be a signal that it's going to consolidate. The first support level below is EMA 8 at 502. That held the last time. If that does break, then you could see a drop down there to EMA 13. Notice there was a big volume spike. Now there was an upper wick that formed on today's candle, so there was some profit taking. And if you look here at the 15-minute chart, you'll see here it topped out early in the morning, and then it came down and made a double top. Yeah, you can see here there was a double top formed, and so basically, yeah, when it failed to get back above the closing price here at 11:30, you know, this was the high close at 11:30, and then when the 2 o'clock candle failed to close above that, that was signaling that it could possibly pull back. That was the double top. It came down, it hit EMA 13 support, bounced off, came back up, failed to make the high close, and that was a signal it was breaking down. And then when this candle broke below the middle Bollinger Band at 3 o'clock, that was signaling downside risk. Notice the candles were riding EMA 4 resistance hard down into the close, and then there was a bounce off of the 50 and 100 simple moving averages. That is the key level to hold. It needs to stay above that 617 level. If you see it drop below, then if you look down here, I know it's hard to see, there's the 200 simple moving average at 502. That's the next support level if it drops below the 6 support zone. So it could drop all the way down to 5, and notice how that lines up with 502 on EMA 8. So yeah, so keep that in mind. It could consolidate if it fails to break resistance and support breaks. Okay, let's look at RMGN. Okay, yeah, this closed up 59% today. Congrats everybody. It was at much higher levels. It hit 245 today. It had a giant gap up open. This was a really nice swing trade. I mean, we put out alerts yesterday on the close above the 50-day simple moving average. So this was in last night's video, and we pointed out that the last close was in October up here above the green line, and then it had been in a downtrend working on turning this middle Bollinger Band into support, and then yesterday that close above the 50-day simple moving average is the bull signal. You love it when they follow through. This followed through hard and had the giant gap up open, so wasn't really expecting that. You know, very nice though, and it ran all the way up to that key level. Notice it hit that blue line. That's the 300-day simple moving average, and it pulled back. Our strategy is always locking gains at the 300-day simple moving average. Over the course of a year, more times than not, you will be very, very happy that you sold at that level. Thank me at the end of the year. You'll be so glad that you did. And so most times than not, they pull back. If they do get above that 300-day simple moving average and close above, that keeps it in play, but then it has to stay above that level. The 300-day simple moving average becomes the stop loss if the share price gets above. So this one pulled back all the way down to the 100-day simple moving average at 153. Now, if that level fails to hold, if you see it drop below 153, then you could see it pull back into the bands. There is a gap below, an unfilled gap between high of day yesterday, the top of yesterday's wick, and then low of day today, the bottom of yesterday's lower wick, and so a drop down to the down to this 115 level would fill the gap. If it came down to that EMA 4 down there at 118 and the candles were back into the bands, it would fill the gap. So that's the risk of this chart, that it does do that. Okay, so as you can see here, there was a climax spike at the beginning of the day. It ran up to high of day, and then formed the red candle. And so the pullback from high of day followed by the red candle with the big volume spike, the green volume spike followed by the red volume bar. That was your signal to lock in gains. Notice that this took place above the upper Bollinger Band. So candles like to work their way back into the bands. This is an easy way. People are always like, well, how do you know when to sell? Well, this is an easy way to lock in gains. If you were somebody that got our alert in the chat yesterday and you loaded here because people were loading yesterday, and then obviously there's not a lot of volume, but people are, we put out alerts, people loaded, and then today when there was the big payoff, when it started pulling back, if you didn't try to lock in gains in this first candle, when the red candle formed, that was your signal to lock them in because the candles were likely to work in bands, back into the bands. Like we're looking for short-term trades. That's mainly what we're doing. Looking for the good entry and exit points. And so when we swing trade as well, as long as the chart's holding up, everybody has their own strategies. But yeah, this is just one of them. But it did come down there. It hit EMA 13 and bounce. Right now it has to happen. It has to hold that close from today, and so that low close, which is down here at 154, and it's lined up with that lower Bollinger Band. If you see it drop below 154, then you could see that 50 simple moving average at 155 tested. To the upside, it needs to get up above the 174. Notice how that was the high close here at 175 at 245. It needs to break above that level to head higher, along with the middle Bollinger Band at 164. So yeah. Keep an eye on that tomorrow. And then CERC. Okay, yeah. So this stock had a nice bounce today. Closed up 20%. RSI, notice it's back above 50. Check this out, bull cross on Fasto. Notice that when it was heading lower, the black line failed to get above the red line, and there was a bearish crossover at the top. That signaled the pullback up here. So you had the bearish engulfing pattern here, where the red candle engulfed the white candle, and that signaled the downtrend. And at the same time, you had the Fasto was above 80 and it dropped below, and the black line crossed the red line to the downside. That's a sell signal. And then notice how that signaled the start of this pullback. Well, now we have the first buy signal since that time on Fasto, and that's this cross back above. And notice the black line crossed the red line for the first time since the cross below. At the same time, look at the pattern that formed. This is bullish engulfing reversal pattern. So we had bearish engulfing to start the downtrend, and now we have bullish engulfing that's starting the bounce. There was a nice bounce today. And so now what has to happen is it's got to get above that middle Bollinger Band. They're also lined up with EMAs 8 and 13. Currently, 279 is the big level to break. If you see it above 280 and it can close in the 280s or above tomorrow, that's going to signal a possible push higher. That this previous uptrend still intact. I mean, it pulled back and then it's trying to hold middle Bollinger Band support zone. If it fails to break back above that middle Bollinger Band, the risk is it drops down to the 50-day simple moving average at 192. So if it gets above 280, then you're looking at a potential run back up to that upper Bollinger Band at 389, and then the high close resistance level from the 27th of December up there around $4. Okay, so yeah, and then the pattern that formed was bullish engulfing. So you can see this: the white candle engulfed the previous red candle. It's a strong pattern. If you look here, oh man, I had another chart for you. Yeah, so it was really heating up. It's okay. We did enough on CERC. You know what's going on there. It has a nice pattern. Has a good bullish engulfing reversal pattern, and it looks like it's going to head higher. We just have to have confirmation. Okay, let's look at SAEX here. Okay, so the energy sector is heating up. We put out alerts in the morning. We had, posted in the premium chat a bunch of energy sector plays. There's just all the way across the board. For the last couple of weeks, we've been posting charts in the sector, and many of them have just continued heading higher. They're not super sexy. They're not cryptocurrencies. They're not in the marijuana sector. They're not. A lot of them aren't returning giant gains, but they're making base hits and they're starting new uptrends and they're heading higher. And so people that are looking for swing trades, there have been some really nice charts and some good setups. And so if you look at SAEX here, it's been in an uptrend. It's above the middle Bollinger Band. It formed this, it's got a, symmetrical triangle pattern. If you Yeah, so basically it's got a symmetrical triangle pattern. It was setting up for the next move higher. What happened is it started running in after hours trading. You know, it was making a nice move today. It bounced off of support. It's above the middle Bollinger Band and above the 100-day simple moving average and the 50-day simple moving average. And there was a nice volume spike today. If you look down here at the bottom of the screen, there was a good volume. And so today after hours it started running and it closed at 295. So check out where it's at. The 200-day simple moving average is at 298. That is a huge resistance level. And so notice that 295 is lining up with the high close horizontal resistance level from back here in September. And so this is going to be a really big level. You know, it has to get above the high close from September and the 200-day simple moving average at 295. If it can get above both levels, then it could run up to the 300-day simple moving average at 430. That would be the next big target. Now keep in mind, if there's a gap up open, there's going to be a space on the chart. Currently, you know, there's a space between this 250 and 295, and so many times with these penny stocks, the gaps get filled. So if you do see it hitting the 200-day simple moving average tomorrow, and a black candle starts to form, then you know, that would be a red flag that gap below could possibly fill, and the candles could work back into the bands. So do keep that in mind. It's always best, like, you know, because we put out the alerts on this literally at the open this morning, at the very start of the day, and so people were getting in early, and then they got rewarded with the gap up open, right? And so it's up at 295, and so now everybody that was in our chat is set up to sell in the morning if they didn't sell after hours. But people that tried to chase and then they're up they bought at 290s, or they try to buy tomorrow, if it fails to break resistance, a black candle could form and then they could be underwater. So the point I'm trying to make is that it pays to get in early. So yeah, it really pays to be in the premium chat. Just throwing that out there. Okay, NIHD. It closed up 19% today. So this was a really nice move. It's got a nice uptrend. I mean, we've been alerting this for the last couple weeks. You know, we literally started alerting it in December when it broke above the middle Bollinger Band. Okay, and it started the uptrend, and then we put out alerts. It broke above that 50-day simple moving average, and then alerts, you know, got above the 100-day simple moving average, and then above the 200, and then now it's pushing higher. Now it broke above high close horizontal resistance, multiple levels. So the big level was the August high close here at 70, and then it's hitting the June high close, and then this really big June resistance here. So this is going to be a big level to break. If it can get above the 80s here, then the next target's going to be the 300-day simple moving average at 110. Then it would be heading to dollar land. That's what's on deck, but it has to get through the 80s. Really big resistance from back in June. So we'll see if it can get through there. It's going to be tough. If it can, then it's going to, you know, then it could be a dollar land in the 300-day simple moving average. As long as EMA 4 at 66 is holding, the chart's super strong. If you see it drop below EMA 4, then you could see that 200-day moving average tested. So yeah, so this has been a really strong uptrend. We'll see if it can continue. Okay, let's look at CVO. This is one to keep an eye on. Closed up 9% today. Notice that you have RSI at 52. Fasto here is at 35. Notice the bullish crossover here, crossover here on ADX. And so basically what's happening is last week on Friday, it closed above the green line, which is the 50-day simple moving average, and it hadn't closed above that level forever. And it's had these green volume bars down here, you know, and they're at the bottom of the chart. And so it looks like they've been loading down here. You know, so they've been holding it back and loading. At least that's what it looks like. And it's been in the sideways channel. And so now you've got another close now above the 50-day simple moving average after bouncing off of the middle Bollinger Band. And if you notice the candles on the pullback, notice there was a declining volume pattern. There was almost no volume yesterday. You know, the seller's tired. The sellers are all tired here. And so nobody really, you know, fought the bounce today. And so what it needs to do is get above 120, the closing price here on the 5th. And then if it can get above that, then the next target's up here around 145. That's the November 28th closing price. And if it can get above that, then the target will be the 100-day simple moving average at 206. So down here at $1, it's interesting because it has potential to head to $2 if it can break through resistance. Now, if it drops below the 50-day simple moving average, it'll signal it's not ready to go. So we're using that dollar level as the stop loss, either that or the middle Bollinger Band at 96. It's just you don't want to sit here holding if it's not ready to go. Today was the signal that it could start pushing higher, and so we'll see if it can follow through. Okay, let's look at SCON. Okay, so this is up 12% today. Okay, so check it out. It closed above 2 key levels. This is another one that we've been alerting, and it's been heading higher, and it keeps pushing higher, so very cool. It's always nice when they follow through. That's why I like, if you're going to be long, to be, in stocks and following stocks that are going up, that are already in an uptrend. It just makes it so much easier. It's a lot harder when you're trying to time a bounce on a stock that's in a heavy downtrend. So it's much easier when you go with the flow. So yeah, so this one keeps pushing higher. It's been on a multi-week run here, and now it got above the 200 and 300-day simple moving averages. That was the move we were looking for, and so now they are the stop loss level. Okay, so if it can stay above 135, the signal's to keep riding. If it drops below 135, that'll signal that it's resistance and it would consolidate. And so if it can hold above that level, then it could possibly keep pushing higher. You've got these levels back here. You've got some key resistance. Right here at just above 145. You have the support from back here. Yeah, it has some upside potential. So we'll see. It's going to be all about this 140 zone. It had good volume down here on the break above. It looks like it wants to possibly head out to the next level. If you notice, it closed today above high close horizontal resistance. It was in a channel. Notice how it was in this sideways channel here. And today it busted through the top of it. This is a multi-month channel. This is a very strong technical move that signals more upside potential, but it has to stay above the 200 and 300-day simple moving averages to be a good play. Okay, so let's talk about ARWR here. Nice move, closed up 14%. Okay, so this was the move everybody was looking for. It did look stronger earlier in the day when it was near high of day. They always do. But yeah, it broke above high close horizontal resistance today. We always look for the high close level, and then you have to break above it to keep going. If it fails to get above the high close, that's an easy way to detect that the strength of the chart is cooling down and that there could be reload levels lower. Okay, so it's just an easy way to do it. And so this has made a new high, and so that's a good, that's positive. That's exactly what you want to see. It's in a very strong uptrend. Notice that it got above the middle Bollinger Band back here in December, and above the 50-day simple moving average. That close above signaled it was in play. It's been in a strong uptrend ever since. It's heading higher. It's above, if you look over here at the moving averages, it's above all the moving averages right now. So it's firing on all cylinders, and it's breaking out. It had a close above high close horizontal resistance on a volume spike. And so what you have to do is look at a longer term chart to find the next key resistance levels. And if you look here, it's only up 3% on the week. It was at higher levels earlier in the week. It's making a break above last week's closing price, and so that's good. Last week, if you caught our video, we had posted some information about how it had broke above this September high close, and so that was signaling more upside. And then now it's getting above the November resistance zone, which we wanted to see. And then so the big level to break is the 200 and 300 week moving averages. Notice that 578 is the same level that zone. It hit like 550 today, and so that's the same zone that it hit and pulled back. You can see that was the high, obviously, of the week, the top of the wick from this week's candle, and so it has to break above this level. If it fails to get above 578 and $6, that's going to signal a temporary top. Similar to if you look back here in 2016, look how it stalled out at the 200-day simple moving or 200-week simple moving average, and it spent a couple of months grinding in that zone. So keep that in mind. This could be getting near the top of the current run if it fails to break resistance. If it can get above and turn into support, it can keep going. Okay, let's look at NBEV. Okay, so this is the classic black candle. Okay, so it closed up 24% today. Congrats, everybody. This is another one that we had our chat members were in at lower levels. People were getting hot on this on the break above the 50-day simple moving average. It started actually back here in December when it was breaking above the middle Bollinger Band, and then it got above that 50-day simple moving average, and that signaled it was really heating up. It pulled back. It formed the long upper wick, so it wasn't as hot of a setup. And then yesterday it made a nice move, and then today there was that big gap up open. That black candle is a red flag. Okay, so if you look down here at accumulation distribution, check out the big spike down. Notice the spike down on CMF. The share price was up today 24% on a giant volume spike, but you have a spike down in accumulation distribution, a spike down in shaken money flow. Those are signs of dilution, signs that they were dumping shares. And many times when that happens, it kills the rally and the candles work back into the bands. So right now, the big thing to do is to hold the 100-day simple moving average. Notice there is a gap right now between high of day on yesterday's candle and low of day today. So if it pulled back down here to 260, that would fill the gap just below 260. Now, the EMA4 is at 266. What you want to see if you're a bull is you want to see this 100-day simple moving average at 275 turn into support. That needs to hold. With this candle floating well above the upper Bollinger Band and it already being on a multi-day run, it's likely that the candles will work their way back into the bands. If they do, it would be better that it filled the gap, and that would make a stronger chart. Now saying that, if you look at the 15-minute chart, it did bounce today, and it had a rally into the close. So this is the black candle, and when you see that forming on the 15-minute chart or early in the day, it is a red flag to just lock them in. The safe things to do is just lock in gains. There's so many charts out there. There's so many good plays. I mean, we have an unlimited amount of good setups. Why waste your time on a black candle? It's just an easy way to eliminate a play from, and you could just come back to it another day when the picture's clear. It's just an unclear picture when you have the indecision candle like the black candle. It just signals the potential downside risk. You have to weigh the risk versus the reward. And in my opinion, a black candle, it's not worth the risk holding over the night. Now this did come back and it closed above the middle Bollinger Band. Notice where it closed right at the closing price in the first candle of the day. So it has to break above 317. If it can, then it'll be the open up here, or just about 337. That'll be the next key level to break. If it drops down here below the support level, the low close from today on the just above 285, around 286, that would signal downside risk, and you could see the 50 simple moving average at 270 tested, and possibly a drop down there to the 250s to fill that gap. Okay, so I've been getting a lot of questions about KODK. Okay, so yeah, sorry it took forever to get here to this chart. You can always, if there's a specific chart that you want to see, you can always scroll forward in the, fast forward in the YouTube video to get to the chart that you want to see. I apologize that it takes a while. There's so many in the video. Just trying to cover a lot for everyone. If you look here at KODK, you can see here, it had the big gap up open with the black candle yesterday, and that was signaling downside risk. And then you saw what I just said about NBEV, so this is NBEV. And the reason why I say it's downside risk is because all you have to do is look at this chart and look how everybody got brutally punished. Not only was it down, but it was a brutal gap down. Well, I mean, it wasn't that far, but the close was right here. But it's a brutal move, when you drop from 1075 or whatever it was down to 975, a whole dollar drop. That's painful, and then it drops lower. You're just, everybody's fighting themselves to leave. This was the best thing next to sliced bread. Earlier in the week, people couldn't get enough of it, and then yesterday, it's people were fighting themselves to get out. And so yeah, that's just the way it goes. What you want to do is you want to be on the right side of the trade. And that's really the key. And so what's happening now is it's pulling back, and what we're looking for is a potential. This is potential bounce off of this 200-day simple moving average, currently at 760, and the EMA4 at 758. Notice that that's the bottom of the gap. The gap was between high of day on Wednesday or Tuesday and low of day on Wednesday. Okay, and so that gap, the bottom of the gap is down here on the top of the Tuesday candle, and so you could see a bounce off of that level. It really needs to hold. If it failed to hold and you saw it broke below EMA4 at 758, that would signal big downside risk, and then you're looking at a drop down to EMA8 at 611, possibly the 100-day simple moving average at 553. So it's such a crucial level on the chart. And if you look down here at the volume bars, look how much more volume were in the last 2 days compared to today's volume. So it looks like a lot of people are still holding. I think there's a really good chance it bounces off of 750. Okay, so that would be the good scenario for the bulls. Notice the candles are just working back into the bands. The chart is still super bullish. I mean, it just got way ahead of itself. It went from 3 to 13 in 2 days, and this candle was floating above the upper Bollinger Band. That's why we always say that it's a risk to hold, because the candles could work back into the bands. That's what's happening here. The EMA 4 would put it back into the bands, and you could possibly get a technical bounce. If you look here at the weekly chart, you'll see, I made the weekly video, and I posted the big level was the 100-week moving average at 11. You want to make sure it stays above that level, and if it drops below, the strategy was to exit, right? So that was the thing, was you didn't want to be holding if it dropped below, and now you see why, because it dropped all the way to 840. So congrats to everybody that was watching the video, and thank you for watching, and just know that these are just my own opinions, and all I'm trying to do is help. And so, yeah, that's just the, it was just an easy way to use a stop loss here if you were in. If it broke below, that was an easy way to be like, okay, I'm just out. It didn't hold above 11. So just keep that in mind. And then the candles also, because that was putting it still above the upper Bollinger Band, the candles work back into the bands. Now notice where it's below right now. Now it's below the 500-week moving average, or the 50-week moving average. It's below that green line, that 845. So it really, that would be great if it could get above that for the week. Now, if it closes below the 50-week moving average, that could turn into resistance, and you could see it drop down to the middle Bollinger Band all the way down here at 540. So as long as that middle Bollinger Band at 540 holds, a new uptrend can begin. Notice that pretty much the whole year, the whole year, except for the first candle, the 2 candles of the year in January were above the middle Bollinger Band, and the entire year KODK has been in a downtrend. And all they did was say they're going to come out with some like photo coin or something, and it freaking shoots up and it erases all those. It's insane. And so we'll see what happens. All you can do is follow the charts, and so that's the key. If it stays above the 50, that would be bullish, and you could see a run back up to the 100. Stays below the 50, and you're looking at the 5s. Okay, so what we're looking at now to time the re-entry is the 15-minute chart, and if you look here, it's on this nasty downtrend, right? So when you start seeing a downtrend like this, that they're walking it down. There's nothing that you can do to fight this. You know what I mean? It's not like you don't have the money to fight this. A normal person can't beat this downtrend. You're just along for the ride, and so you're trying to get in. When it's heading up, if you're long, and if it's down like this, you're freaking super stoked, because you would think that the puts are not delivering. So that's the only problem. Is puts did not put out the gains today. There was a couple that were up good, but not really good. You know what I mean? They were, it was like the equity was, there was like 20, 50, maybe 70% gains on some of the puts, but they weren't rocking it out on the big drop. So that was interesting. But yeah, it's below the 50 simple moving average here. That it has to get back above the middle Bollinger Band at 877, and then back above the 50 simple moving average at 995. Those are the 2 levels to break. If it continues with this downtrend and riding EMA's 4 and 8 resistance lower, the next key support level to bounce off of is the 100 simple moving average at 708. That's the big level. It has to bounce off that level. If it doesn't, you can see down here the 200 and 300 are at 445 and 5, and so it could easily drop to those levels. So it's going to be back in play when it's back above that 50 simple moving average at 995. That's when, if you look back here at 12 o'clock on the 9th, when it got above the moving averages, that's when the chart was super hot. So it's got to get back above for the chart to be running again. Okay, so take a look at NGTF. I'm just going to finish it up real quick with 2 OTC plays. And yeah, this one here is a marijuana sector play. And it had, look at the volume spike. So it had a giant volume spike today. And it had a big break above resistance. And it did close above the above all the moving averages. It broke above the 50, the 100, the 200, and the 300-day simple moving averages. And it also did close above high close horizontal resistance. So that was the move that we were looking for. And so this was super cool. We put out the alerts early in the chat, and it closed up 101%. So, we put in alerts down here. It closed up here. you get the, it pays to be in the chat. So like, yeah, it just really does. And so, yeah, if you look here, this thing has some upside potential. It was just trading back here in 2016 in April. And so this could be headed back to dollar land if it continues. If you look here, it had broken above this descending resistance line. So whenever you get a break above a key levels like this, on a big volume spike, look, it's the largest volume day in the history of the company, and it closed above this descending resistance and above all the moving averages. Now the key is it has to stay above 24. Okay, so if it drops below 24, that's going to signal some consolidation. If it could stay above, that's going to be very bullish. Really, you could say 21. It needs to stay above that 300-day simple moving average at 21.77. If it can stay above that, that's going to signal that it's still strong. And one more to leave you with is DTST. This was another one. We didn't catch it at the beginning, but we did alert it at lower levels, and it closed much higher. You can see it closed at 300%. Another giant volume spike. Not sure why this is running. It's got to have some, something crypto related, I'm sure, is coming if it's not already out. But yeah, you can see here it's breaking out to higher levels, and yeah, you can see this could be headed back to dollar land as well. So yeah, this was a big move on a volume spike. So that's what we've been doing, is following the OTC plays and looking for ones in the cryptocurrency, blockchain sector, and the marijuana sector that have big volume and are breaking resistance. And then we post those plays in our chat. Okay, so it pays to be in the premium chat. That's where it's at. Okay, I'll post the link below the YouTube video. Thanks for viewing. Really appreciate it. Have a great night.